Welcome. I'm the Sovereign Counsel. Most lawyers see their office as just a necessary evil. It's a drain on capital, right? A line item on an expense report. But that is the amateur's way of thinking. A sovereign lawyer understands that where you work should be an engine for your wealth. So today, we're not just going to plug a few tax leaks. We are going to completely transform your single biggest expense into your most powerful strategic asset. This quote, well, it says it all, doesn't it? It separates two completely different realities. On one hand, you've got the lawyer who works for 30 years and retires with nothing but some depreciated furniture. And on the other, you have the lawyer who builds an entire empire from the very same office space. The difference isn't about working harder. It's all about structure. So the very first step is a fundamental shift in how you think. Your office is not a cost center. It's a wealth creation vehicle just sitting there waiting for you to turn the key. We're going to move from seeing your practice's home as a liability to engineering it as a core asset. Now this is what's really happening for the vast majority of lawyers. Every single month, that rent check flows out of your firm right through a tax leak and straight into your landlord's pocket, building their equity. That money is just gone. And let me be clear, if you plan to practice law for more than 7 years, renting isn't a conservative choice anymore. It's a financial failure. Okay, so how do we fix this? Let's get into the sovereign solution. We are going to completely dismantle this illusion that renting gives you flexibility and reveal the far superior mechanics of ownership when it's structured with sovereign precision. I mean, the comparison couldn't be more stark. On one side, you're just a tenant. On the other, you're a titan. Owning your own property isn't just about building equity. It's about unlocking some incredibly powerful tax shelters and creating a whole second income stream from the very space you practice law in. Look, this isn't my opinion. This is just mathematics. And here is the core maneuver. It's actually quite elegant. First, you create a totally separate legal entity, an LLC, and its only job is to own the real estate. Then your law firm pays that LLC rent. Now, that rent payment is still a deductible expense for your law firm, just like it is now. But instead of vanishing into a landlord's bank account, it flows into an entity that you control. And just like that, you've converted a business expense into your own personal equity. And this is where it gets really powerful. Tax efficiency. Take a look at this chart. If you receive that rental income personally, you'd be looking at a much, much higher tax rate. But by structuring it through a real estate holding company, which is taxed very differently, you can see that rate gets cut by more than half. This is a direct, massive, and entirely legal tax savings. All right, so we've got the structure in place. Now let's add some fuel to the fire. We're going to explore the specific, powerful tools that sovereign lawyers use to maximize the financial velocity of property ownership. These are your wealth accelerants. Depreciation? It might be the single greatest gift the tax code gives to property owners. It lets you claim a loss on paper for the wearing out of your building. This reduces your taxable income, even while your property is most likely going up in value in the real world. It's a loss that doesn't cost you a single dime. This is how the wealthy create tax-free cash flow. But we don't just sit around and wait 39 years for those savings. A sovereign counsel uses something called cost segregation. Think of it as a specialized engineering study that breaks your building down into all its little components, the lighting, the HVAC, the custom woodwork, and it accelerates their depreciation over much, much shorter timelines. This front-loads your tax savings, creating a massive influx of cash in the first few years you own the property. The second accelerant gets right at the biggest barrier for most lawyers, liquidity. The I don't have millions in cash problem. Well, you don't need it. You need strategic leverage, and the SBA 504 loan program is the absolute gold standard for professionals like us. And just look at the difference. It's dramatic. A conventional commercial loan, you're typically going to need 20, maybe 25% down. With an SBA 504 loan, that can drop to as little as 10%. This makes acquiring a major asset radically more accessible, and it lets you keep your capital for other investments. So here's the play-by-play. Your established law firm is the perfect anchor tenant, which makes you a very low-risk borrower in the bank size. You acquire a building, you occupy just over half the space yourself, and you lease the rest to complementary professionals. Think CPAs, financial advisors. And now your colleagues, they're the ones paying down your mortgage and building your equity for you. Now, I know what some of you are thinking. This strategy isn't just for old-school traditional firms. So let's talk about how these same principles apply to the modern, hybrid legal world, and critically, how we protect these new assets from liability. For those of you with hybrid or even fully remote practices, we need to move way beyond the simple home office deduction everybody knows about. This is about what I call Home Office 2.0, structuring a portion of your own residence as a dedicated, high-tech professional suite. As long as that space is used exclusively for your business, that's the IRS's big exclusive use test. A proportional share of your home's costs becomes a legitimate business deduction. So if your office takes up 20% of your home, then 20% of your mortgage interest, your utilities, your property taxes, all of it is deductible. You're literally turning a personal expense into a professional asset. Okay, now we have to address the elephant in the room, liability. As a lawyer, you know you are a target. This is why, and let me be crystal clear, your law firm must never own your real estate directly. That holding company we talked about isn't just for taxes. It is your essential protective barrier. It's a firewall. This separation creates a legal firewall. So if there's a malpractice suit against your firm, they can't touch the building. And if someone slips and falls on the property, they can't get to the firm's assets. This structure also makes it so much easier to bring partners in or let them retire. And it even allows family members who aren't lawyers to be co-investors in the real estate. It gives you immense strategic flexibility. So we've covered the mindset, the structure, and the tools. Let's bring it all together and summarize this transformative journey from being a conventional, rent-paying lawyer to becoming a strategic, asset-building titan of the legal industry. You see, the path is actually very clear. It all begins with changing how you think. That's step one. Then, you implement the correct corporate structure. After that, you deploy the wealth accelerants of depreciation and strategic leverage. And finally, you fortify your assets with the proper legal protections. That's your roadmap. So I'll leave you with this one question, because really, every single rent check you sign is an answer. Are you just building a practice that's going to end the day you retire? Or are you building a self-sustaining financial empire that will outlast your career? Remember this, your legal skill is the tool you use, but the ultimate goal is not more billable hours. The goal is tangible, appreciating, wealth-generating equity. Your first move here is strategic, not transactional. Before you even think about looking at a single property, you need to sit down with your tax advisor. You have to run the numbers. Compare your current rent payments against a decade of ownership. Believe me, the results will speak for themselves. Secure your assets. Build your legacy. I'll see you in the boardroom.